Hello, my name is Shanda Wright. I'm not sure if we've met yet, but if we haven't, nice to meet you. My story is I wanted to learn how to put my money to work for me at a very young age. And so I started getting into the stock market, into the real estate market at very, very early ages. Had no idea what I was doing it all because I thought these were safe investments. I thought that I couldn't lose. I thought there was no way to. The job was to get into the market early is what I had always heard. Earlier is better. And then I learned some things. And now I actually very much am a proponent for mentorship over mistakes as a learning resource. And this question keeps coming up for me. So I really want to walk you guys through what I've learned through my experience with stocks, through my experience with single family, multifamily, and construction in the real estate space, and then also in cryptocurrency. Because the truth is experts say that the majority of investors in every market fail, and that if you aren't in the top 5% of the best traders in the world, what you should be doing is purchasing like an S&P 500 or one of those index funds, because it typically outperforms most traders. Now, that's the case in real estate. That's the case in the stock market. That's also the case in crypto. But there's this one factor, and it's the number one reason that people are in those statistics. And if you can master this one thing, you actually have the opportunity to defy the odds. So I want to talk to you about that. I'll give you a little bit of sauce at the end that adds a second little nugget that I learned along the way that's actually like the easiest way to put your money to work for you in a way that is safe. And so I really want to talk about the emotional market cycle. If you have heard of the emotional market cycle, I want you to acknowledge it in the chat. Just let me know if this is the first time you've heard this, or if this is a totally this is a concept you get. But either way, I really want to talk through it like this is the first time you're hearing about it. Every single market, whether it's real estate, it's the stock markets, it's cryptocurrency, it's commodities, it doesn't matter. Every single market has people in it. And it's funny because I know there's software that does trading. I know that. Also, people know that. People know that. And there are retail traders. There's also institutional money that is moved into different markets based on people. Right? People are a part of any given market cycle over any given price point. By definition, the market, like the marketplace pays for value. So whatever the marketplace values is what people are going to be purchasing. So that's the case with anything. Supply and demand is the basic function of all pricing. Right? I am my very first mentor in business. He actually said, when it comes, he's like, is a Rolex worth 20 grand? And then he's like, find one for less. Because the truth is that if they were worth less, like if that's how much they were worth, then that's what they would be priced at. So when we look at marketplaces and we see that people pay for value, then we can look at people as the indicator for what makes the market move, right? So this is why you'll see stock traders read the news. This is why you'll see crypto people check the crypto news, right? This is why you'll see real estate agents checking city notes or looking at what's going on in terms of development in the neighborhoods, keeping in touch with their financing. So like the mortgage brokers, so they know what's going on in that space as well. Because the truth is if you don't know those people elements, you can look at the numbers all day long. But there's other pieces to everything that's going on that need to be factored into your decisions, right? It's one of the things I learned very early in my trading career is do not be trading while the White House is speaking. Don't do it. Just don't do it. Don't do it, girl. Don't do it. I'm not going to do it, girl. I did it. I did do it a few times. That's how I know now, right? But here, this is the conversation I want to have is I knew better, still did it. So I was like, well, but what if? No, but what if? Nuh-uh, right? That's not how we play this game. This is not gambling. This is not emotional, but it is. But when we can take the emotions out of it, when we can learn to factor in people's emotions as data, then we can actually capitalize on it. That's how you can get a cutting edge. And that's the key to success when you're trading, when you're investing in any market, real estate, currencies, commodities, it doesn't matter. Okay. So the emotional market cycle, I am going to share my screen and I'm going to show you what this looks like. Now, one of the things that I love about this is what drives my personal belief around anything I purchase, anything I invest in, is the emotional market. Okay. Looking at the market itself, you can feel some things. Now, you can obviously actually take this graph and overlay it on top of pricing. Very interesting, because it's eerie. It's eerie, y'all. Like, when you actually do that, it can be very interesting. But when you actually just think about the emotion, even if you took all of these like the little squiggly lines away, and this is actually from Wall Street. This has been around forever. Okay. So what you can do is you can check with a thermostat in the market. How does the market feel? Hope. They would say things like, a recovery is possible. I'm going to use my experience with real estate because I rode this entire wave. Okay. Disbelief is when I purchased into real estate. That was 2009. 4 houses were sold. And the one that I purchased was like an estate sale with 4 owners that were from different countries. Like, it was not, no one wanted to sell their house that month. Okay. Everyone remembers 2008, 2009. Okay. Now what happened in 2011? Maybe a recovery is possible. Right? Then what happened? We saw in 2018, oh my gosh, this is getting better. Oh, 2019, time to get fully invested. Thrill. I will buy more. I will sell things and leverage. I'm going to use more debt to collect. I'm excited. There's thrill. Euphoria. I'm a genius. We're all getting rich. Everyone's getting rich. You can't lose. When you start hearing the masses say you can't lose with, right? That's how we felt in 2017 about Bitcoin. That's how we felt in 2007 with real estate. I watched it happen. My mom sold a house in 2007 and she's like, I think I'm going to wait a minute. And I'm like, girl, that was smart. Right? And then it comes back the other side. We just need to cool off. Why am I getting margin calls? This dip is taking longer than expected. And a margin call just means that your debts are being called in. That's one of the things that I look for when in information. You can look at different banks and see whether or not they're lending money, whether or not they're calling in their loans, whether or not they're cutting off their lines of credit. That's a really good indicator that certain sectors are on the other side of euphoria. Denial. My investments are with great companies. They will come back. Panic. Everyone's selling. We need to get out. And then there's anger and depression. Everything's lost. And I remember sitting in a doctor's office in 2017 with a doctor. And I said, are you going to retire here? Like, what do you want? It's so funny. I can't not talk to people. It doesn't matter what's happening. So I'm in this walking clinic and I'm asking this doctor, about his life. And he said, well, I would love to retire, but I didn't invest well. I had all my money in this and that. And then the crash of 2008, this was 10 years later almost. He's like, I'm not sure when or if I'll be able to recover, if I'll be able to. Okay. So these are the emotions. What I like to check in on. And the reason that I wanted to come here is because people ask me all the time, do you think it's a good time to buy X? Do you think it's a good time to buy X? What I think is you should know what criteria you are going to use to decide what your investments look like. Had this conversation with a real estate agent yesterday, day before, and he said, well, I've got all of these people who feel that real estate is at a high right now, so they don't want to buy high and sell low. That's not good investment advice. They also don't really love having their stuff in the stock market because they've already put as much there as they want. And also with the printing of money, a lot of that's moved into the stock market. So a lot of people are a little bit cautious, but it's also at an all-time high. Like, it's just really buy low, sell high, right? But FOMO catches us, right? How many of you, when you see, and I see it on the charts all the time, when something hits an all-time high, there's money that chases it. But those are the people that lose. Chasing something that's on a run. Oh my gosh, is it too late? Am I going to miss out? That's not an investment strategy. Just like, oh my gosh, things are not going the way that I expected. And now not having, like, you don't change your strategy because of how you feel, right? Creating your own strategy for what you like to get into, what you want to get into, when you want to get into it, what it needs to stand for, what it needs to be backed for, and how to learn these things. Because there's new markets. Because here's the thing with crypto, a lot of people are like curious about it, but like, how do I get in? Is it just because it's not a part of your current portfolio doesn't mean it's not something to get educated on. But don't just go and you can do what you want. Do what you want. Of course, I'm not you. I personally have my gambling budget and my investing budget in different sections. Now, I don't gamble, so that's a really small part of my budget. I do invest. And so, but I also invest in education. I invest in lots of different projects. And so it really is something that when you start to create your own list of criteria, when you start to create your own checklist based on your knowledge and education, where you're willing, here's the thing for me. And I heard this from a multi-millionaire. And he says, he's at this event, and he says, you know, if I'm going to lose, there's always a lesson in every loss. Doesn't matter what you're doing. There's a lesson in every loss. Your job is to find it. There's always something that you can learn that will be worth more than the loss. If there's an actual loss in life, in business, in investing, that's the rule of thumb. Okay. And every single successful person I know says that that's why failure is a part of success, not the opposite. Okay. So we're going to lose some trades. We're going to make some mistakes. We're going to invest in some stuff that doesn't go where we want it to go. However, what can we learn from that, right? What can we take from that that's going to yield us more in the long run? And what he says, and I love this, what he said is, why would I pay someone else to learn? Because they're just as likely to lose as I am, especially if I've got a good mentor. So if I'm paying for their education, like they're learning with my money, I would rather learn with my money because I'll just go get more money. So and I am convinced the number one key to success when it comes to investing is the energy you go at it with. I think that's the case with relationships. I think that's the case with health. I think that if you show up to the gym to punish your body instead of showing up to the gym to celebrate your body, that the results are different. I feel the same way in relationships where people stay together because they have to, versus people who are like, oh my gosh, that's my favorite human on the planet, I just want to run away with you. I think the relationships are different. And I think the same thing comes into investing. Okay. So if what you're coming into, and when I was coming into investing, of fear that I wasn't going to have enough money when I was older, fear that I wasn't going to be able to continue working, fear that I wasn't going to be able to keep this house of cards together because it was just paycheck to paycheck. And I was like, what if one day there's a bad paycheck? What if one day something extreme breaks, right? We've all had those days where a roof leaks or something traumatic happens, right? And I just didn't want that pressure, but I was coming from this energy of fear instead of the celebration of what's possible. And so when we are fearing loss so much that we don't trust ourselves to learn because we know we're going to make mistakes, what you think they're like, people are people. I found out statistically that investment advisors, like people that sell securities, like stock brokers and stuff, they're no more or less likely to be wealthy than the rest of us. It's a course. They take a class, they get a certificate, they learn how to do it, and then they can do it. It's like a doctor doesn't have to be healthy, right? These are just, it's crazy to me, right? So when we're looking at the energy behind something, how can you create, or how did I create a sense of excitement and adventure and learning and curiosity around investing? And I can tell you is that I first invested in my education. I invested a lot. And I've looked back at the numbers. This is so funny because there's, I put multiple six figures into my education, and I'm sitting there, I'm like, I know what year that was. I know how much Bitcoin was. I know how much that Bitcoin would be worth if all I had done was take the same money that I paid for my education with and put it into Bitcoin. I was like, that education owes me some money. We're going to get paid from this baby. Okay. But what it did is it meant that I was never in a situation where if there was a loss, that there wasn't a lesson, because I had a calculated plan. I went, executed the plan. I reviewed. It's the ultimate scientific method. I have a theory. I go out to prove the theory. I see that the theory works or doesn't. And then I take more data and I create a new theory and move forward with the help of mentors who have done it around me, with them showing and checking, my homework and my point of view and all the things. Okay. So this is how I look at any given market. Do I believe the mass of men? They say that the best investment advice you can get, and I've heard this from multiple billionaires, find out what 95% of people are doing and do the opposite. Because 95% of people will rely on their friends, family, or the government for financial assistance from 65 on. And I believe that is a real statistic based on my experience. So if most people chase, right, fear of missing out, which means that belief, thrill, and euphoria, in my opinion, from my strategy, it's too late. I buy fear. That's when everything goes on sale. That's when we get good deals. That's when my price points are where I wish they were back when they were in euphoria. And these cycles can go through different timelines. It totally depends on the marketplace. I know that my hometown is in euphoria for real estate right now. How do you know? Average home is going for crazy, like double what it was 5 years ago. And it's selling $100,000 over asking price. And there's no inventory and they're closing next day. Sight unseen. That is not a hopeful environment. That's a euphoric environment, right? So when we look at, same thing with when you look at the stock market, like, and I was saying the other day, Warren Buffett is even selling his stocks, right? Because the price point is above that which the actual finances of the company makes, at some point you have to take profit, right? So that's how you can really look at what this is. This chart right here is the fundamentals of how I choose everything. Because it's not just about what you start in terms of businesses, in terms of habit patterns, in terms of investments. It's not what is important, but when is equally as important. Okay. When you look at the virtual reality space, there's been patents for it for decades. They've been trying to launch and create a space where people are actively engaging in virtual reality. But what happened over the last few years has really set people up to be looking for experiences that happen more inside the home, but involve more of their senses. It's been a perfect transition, right? When you look at the cell phones that were developed way before we were ready as a society. There's, if you haven't, okay, here's some homework for you. If you have not watched Simon Sinek's Start With Why Great Leaders Inspire TED Talk, that's your homework, because freaking amazing. But he talks about jumping the chasm and how the first 10% of adopters, people will adopt onto an idea, a technology, an investment, a marketplace, a neighborhood. They'll get into that just because they see the vision. But the mass of men actually won't start coming into a space until there's about 35% adoption. And that's when it tips over. Okay. So that's the way that I look at opportunity. I think it's really interesting to watch timing. What's on trend? What makes sense for where the world is going? Right now, that's why I'm so bullish on crypto. Why? Because they keep printing money. You can't print money and expect it to not create that hyperinflation. We're going to have to hedge against inflation. We're hitting inflationary all-time highs. You've seen that, right? I don't know, your groceries, I get a lot less for $100 than I used to, right? So everything is costing more. Look at the gas prices, look at lumber prices, look at the construction material, look at labor. Everything is going up in price. So the cost of living is going up. Inflation is going up. Interest rates are at an all-time low. They can't stay there. So what are they going to do? Now, I've got some theories, but the moral of the story, the easiest answer, also there's this other problem called most people can't get bank accounts, and moving money globally is a challenge. It is a challenge, y'all. I did not even know moving money from country to country was going to be this big a pain in my butt. But all of that to say, so now we've got this technology called Bitcoin that is a very, very big solution to this hyperinflation, to this global banking issue, right? Solves those problems. And we've got institutional money moving into it. So big banks, billions and billions. The US government has over 70,000 Bitcoin. Like, what? Crazy. Okay. Also, it's not at an all-time high. And the market potential, way beyond what the all-time highs are. So when I look at things like Bitcoin, I think that's a really cool space to start doing research. Now, that was the first thing. This is number one. This is the key to all of my decisions. I look at this emotional cycle. I personally love betting against the masses. I love being underestimated. I love being that person that's like, okay, cool. Maybe I'm wrong and you're right, but maybe I'm right. I'd rather do that. So this looking at the emotional market cycle is how I can check the emotions in myself when I'm like, oh my gosh, I wish. Oh, of course, everyone else is feeling that. That's why it's continuing to run. Wait, because everything comes back, everything retraces, nothing can go up forever. So as soon as I recognize that feeling in myself, or like when I'm feeling, oh my gosh, it's a da da da, you know, who shorted the market? Why did the government allow this to happen? I'm getting 100% out of the markets. When I have those feelings, I was like, wait a second, this is how everyone else is feeling. So let me capitalize on that, right? Because I have to set myself apart if I'm going to create wealth at a level that is bigger, right? So second sauce. Okay, so this is the first one. This is the first thing. This is how I decide everything. This is how I decided to move out of real estate and into crypto on a much bigger scale, and how I look at markets. Now, the second little piece is cash flow. Cash flow always wins. This is based on the value of something going up and down. And if you're investing in something as a appreciating asset, which you can do, it's not all speculation. Some people are anti like buy low, sell high because it's speculative. Well, on some level, unless there's data and factors and trends and information you can use. So you can do research and figure that part out. But when you look at cash flow, this is why I moved out of single family real estate and into multifamily real estate. Why? Because single family real estate is about the value. Multifamily real estate the value doesn't go up and down with the market, it goes up and down with the cash flow. So the value of a multifamily property is directly related to the cash flow. Well, and it doesn't really matter what the market does. If the market's high and the rents are here, when the market goes down, more people are going to be renting. It's perfect, right? As long as you want to manage it. I don't. That's why I like joint ventures. Okay. But that's a really great example of how you can focus more on cash flow and less on the market moves up and down. You do the same thing in crypto. You can actually earn a percentage just by holding your crypto. You can also, if you have multiple cryptos, you can like put them together in a certain holding space and earn interest on it that way. You can do mining. There's lots of other ways that you can create passive residual compounding interest without it fluctuating up and down. Now you want to look at what that looks like and how that's paid out and, you know, what the liquidity is, because that's the other thing with, you know, multifamily real estate. You can't get your money out quickly or easily. You usually have to sell your shares of the building, right? Which can take time and it takes certain investors and it takes certain things. And with crypto, it's the same thing. When you're staking or providing liquidity, when you're holding it, making money on it, sometimes there's timelines and you got to make sure that you're comfortable with those timelines. But for me, I have timeline specifics. I have where are we on the emotional market cycle specifics. I look at global news. And then I also look at my personal budget. I have this question asked me all the time. How much should I put into XYZ? And again, I'm not going to answer that question. Why? Because your budget should be your budget. I don't know how much money you make. You can get into, well, I mean, real estate, you can get into it with 50 grand or less. You can probably get into it with 30 grand if you're in the States. When it comes to crypto, you can get in with 10 bucks. When it comes to stocks, whatever the stock value is, you can buy one stock. So you just got to find the market that fits for you. And I also look at risk to reward and ROI and what the potentials are and all that. But when you start, but I can't make that call for you. So what I recommend, here's my budgeting percentages, live on 50% of your income, pay off debt with 10%, have fun with 10%, invest 10%, save 10%, and put the other 10% into studying to create more, because we have to continue to grow and learn and become. The world is changing so fast. We must invest in ourselves. Plus, if we're our only limiting factor, which is true in the free world, then when we get better, things get better. I've been reading the self-confidence formula every single day. And it literally at the end says, nothing that is not built on truth and justice can stand the test of time. And so learning to be better at creating bigger opportunities, bigger value adds to the world, to other people, built on truth and justice, I think is one of the best investments you can make. So that's in my opinion, how much you should invest is 10%. Also, they say don't invest what you can't afford to lose, because you can't go into the market with fear. That's not energy that can be blessed. We're not multiplying that. That's no good. So this is the key for my success. This is the thing that I look at when I'm making decisions. This is what I wanted to share with you, because no matter what's going on in the market around you, you can beat the odds. It's doable. You just have to study and learn and master the skill set of whatever it is you're learning to capitalize on. Okay. So my hope for you is that this would be the most profitable year of your life. You would see more compound interest and income streams that are passive coming into. Now, we all know there's no such thing as passive income. It takes effort to build those, but those non-active income streams, those residual incomes, those compounding incomes, the sleep money, that this would be the year of sleep money for you, so that we can spend more time awake doing the stuff that's really fun. So I want to say thank you. I appreciate each and every one of you. If you share this video, then that will put you in a draw for today's Starbucks. I do want to connect with you, get to know you better. Thank you for being here on my channel. Thank you for being a part of my life and my circle. My website is live, so go and check it out. I will put the link here. I'm so excited for each and every one of you. And if you're looking to learn from mentors, that's my gift. I am a bridge. This is my jam. This is what I do. I love it more than I can even express. I'm the bridge from the people who desire to the people that have, because I've been seeking out this mentorship for years and years and years and years. And I know sometimes you don't have access and you don't know who the right people are. You don't know how to get access to the people that are going to honestly sow into you. I do. Because that's how I went from drowning in debt and losing at all my investments and working 3 jobs to running 4 businesses and putting my money to work for me. That's how I did it. It was through these mentors' information, through this mentorship. And so I can connect you to those mentors. So if you're looking for more information, more support, more education in this process, so that you can learn how to master your mind, master your money, and master your life, then go onto my website, book a strategy call, put in some notes. Say, I was on your channel. I saw you. Like, I want to know where I know you from, so that when I see it in my calendar, I can get some context. And I really look forward to you doing better this year than any year before. And it's going to be a movie, y'all. 2022 is a movie. So with that, thank you for everything.